welcome to another download. Yeah, 110, Dan. Yeah. So I think you've got a bit of feedback for a question that you and Brendan mentioned there.
Last week, Brendan and I spoke about the exchange-traded funds, Yield Maximiser and Dividend Harvester. And one of the questions was, why is Dividend Harvester down about 20% where the All Ords is sort of on par from where it was? The simple answer is because that McMillan tell better shares when they've got to protect that portfolio. And on a rising market, it takes a while for those hedges to actually come out of the fund. So that's the drag on the price there. So
okay.
I see their dividend for the month was down about 18 cents, where last year it was around 20 cents at that same period. And we've seen that, Michael, haven't we? Some of those dividends are starting to be cut.
Yeah.
So that's going to be reflected on these sort of things as well, I think.
Yeah, and I guess too, because they are taking that dividend stripping strategy, they're buying shares come dividend, which are typically, you pay a bit more for them, then they'd be selling them ex-dividend, so they wouldn't be getting the the same sort of capital value on the crossover.
That's right, and it depends what they're holding in there. So if they're holding in the likes of QBE, which I think they are at the moment, they've been sort of sold off as well, so they're copying it a bit that way. So. But I think one thing Brendan said, which reminded me, with this hedging or the protection in there, what do they get? 1/3 of the downside and about 2/3 of the upside, or was it the other way around? Anyway, so you're not getting the full benefit out of the growth as well, but that's the trade-off with that higher dividend, isn't it? So.
Yeah, the compromise, I guess, isn't it? Yeah, but no, I mean, it's a great little fund, isn't it? And Better Shares have got a range of different exchange-traded funds. I mean, for commodity based, and of course, the bear and the strong bear, which actually sort of are inverse performing to the markets.
They're performing today.
Yeah, and I think we're getting someone up from Better Shares to have a bit of a chat.
We are on the 23rd of November, so there's a date claimer for you, Tanya.
Yeah.
We first ran into Tanya like 10 years ago, Michael, didn't we?
Oh, yeah.
Down in Sydney or somewhere.
ABN AMRO warrants, I think.
Something like that, Right. But Tanya's coming up to present to us. So there's a date claimer, I think 3 till 5 or thereabouts on the 23rd of November. So, but we'll get something out in the email about that.
Oh, no, and she's great, Tanya. She knows the stuff, so no.
Been at it a long time, hasn't she?
Absolutely, no. But I mean, I guess probably one of the other things too, Dan, I know we were talking about before, we've seen Alcoa over in the US, and it's sort of typically the first big company, in US reporting season. The US are a bit more regular, I guess, than the Australian market in their reporting. They report every quarter. So Alcoa has come out, and I think they were smashed about 11% there overnight. So we're seeing a bit of a sell down in our commodities and mining companies. Bit of a worry that they reckon that expectations for Alcoa were already low, and the result came in below expectations. So,
and I think that's weighed on the rest of the market overnight too, Michael, didn't it? Because they're saying if they're down, what are the rest of the companies going to be reporting?
Yeah, absolutely. And I guess too, Dan, I know we mentioned that there a few weeks ago in regards to utilities companies. We've now started to see that 10-year bond yield starting to increase, and again on the prospects of higher interest rates in America. So we are starting to see that movement out of those higher dividend, more defensive sort of sectors, utilities and property trusts. And again, moving
and we've seen that in the property trusts, particularly in the last few weeks, haven't we? So,
absolutely. We were having a look at the property trust index the other day, and I think it's sort of back towards its 200-day moving average. So.
Michael, on that bond, the rates there, wouldn't surprise me if we've seen the bottom now. It's just, it seems to have that big basing look about it, that chart, doesn't it? So I think, we're going to be starting to head up there now.
Absolutely. When we're at 0 to 0.25 in America for so long, and they've been sort of sneaky. They've got an interesting one where they sort of have that range, don't they? They don't have a specific rate. And they've been moving up in the range slightly. And you're exactly right. It's only a matter of time, isn't it, before the Federal Reserve kicks things up over there.
Yeah, if they can stare down Janet Yellen, I suppose that's when it'll happen. But one thing that's happened over there, Michael, with all that quantitative easing, those big companies have been buying back shares, haven't they? So in some ways, that's sort of artificially inflating those prices over there. So when it does come off, it might come off in a reasonable sort of flurry.
Yeah, it's an interesting point, Dan, that one. Yeah, the amount of on-market buybacks that companies have been doing in America has been extraordinary.
Yes.
So again, the signals are out there that perhaps things are a little bit top heavy over in US markets. Again, I guess if the Alcoa result is any benchmark, we could see some downgrades over the next couple of weeks over there. We'll continue the rocky ride, I guess. We've got our banking reporting season. We had Bank of Queensland there last week. Wasn't too bad. Again, pressure on margins, and which everyone sort of expected. But dividend was steady.
Doubtful debts was okay as well, though.
And dividend remained at the 38, which was encouraging. So we'll hear from NAB, ANZ and Westpac in due course. Hopefully their numbers meet the market.
NAB might be the surprise there now. It's got rid of Clydesdale, so that'll be interesting.
Very true. Yeah, it's good to get that skeleton out of the closet there back earlier on in the
year.
year.
Back to the Scottish.
They can have it for sure. I think that's about it, Dan.
I reckon we've waffled enough, Michael.
Absolutely. Thanks again.
Cheers.